What's going on, guys? We have some exciting news today. We have our second state now adopting a Bitcoin reserve. I'm sure a lot of you heard the other day that Arizona's governor, Katie Hobbs, vetoed a Bitcoin bill. However, right after that, she signed House Bill 2749 into law Wednesday, establishing a state-managed Bitcoin and digital asset reserve fund that will hold unclaimed digital assets and staking rewards, making Arizona the second state to create this framework for holding Bitcoin digital assets. However, this isn't as good as the initial bill proposed, which would have allowed Arizona to put as much as 10% of the state's fund into crypto, but I'd still call it a step in the right direction. And I'll leave this down below for you guys, but it basically shows the progress on each state, where they're at in terms of getting these bills signed into law, the different groups that need to sign this for it to move forwards, so definitely check it out down below. But it is happening. The US is turning orange. More and more states are at least proposing some sort of reserve. We will definitely see some rejections, some denials, having to go back to the drawing board to try again. But just as we have seen this week, we will see some approvals this year. Cities, states, and countries are warming up to Bitcoin. We also have news today of a Standard Chartered Analyst saying that their prediction for Q2 for Bitcoin was too low. They had a $120,000 price target for Bitcoin by the end of this quarter, which means basically they have the rest of May and June to see Bitcoin reach 120. And Kendrick, the one that posted this prediction, says that the 120,000 price target may be too low. It looks very achievable. I mean, Bitcoin definitely has the potential to gain roughly another 20% in about 2 months. It's more than possible, but it's up to the market to bring that into fruition. And while they believe their $120,000 price target for Q2 might not be bullish enough, their year-end price target is 200,000. Roughly double for Bitcoin. That may be too optimistic. It is now all about flows. Flows are coming in many forms. And he highlights the $5.3 billion worth of inflows into the spot Bitcoin ETFs over only the last 3 weeks, suggesting that even more institutional money is on its way in. Bitcoin is looking fantastic today. Was able to break the $100,000 wall. I'd expect our next resistance right around 102,000, which was a previous point that we got hung up at. Definitely multiple times we have seen this. I think we have potential to keep pushing towards 102 before the market lets off the gas, but we'll see where this goes. Bitcoin has gained 34% from its death cross, which throughout this cycle, these death crosses tend to mark within days of the bottom, which seems to be the case again here. Also, thanks to Bitcoin's upward moves in the past few days, this golden cross is getting more and more of a certainty. And let me show you what Bitcoin has done every time after it's posted a golden cross. These are typically followed by some pretty big upwards moves. Here's our first golden cross of the cycle in February 2023, followed by a death cross which marked our lows at that point, followed by a golden cross which also brought a massive rally afterwards. Then we had the Mt. Gox drama, which brought us down to 49K, which also flashed a death cross literally like 2-3 days after that, days within the bottom again as that death cross. Then we get our next golden cross in October of 2024, which is followed by a massive move up. Another death cross again as we get this tariff fear, as we get fear of less rate cuts. This death cross too marked within days of the bottom. And now we are heading, in my opinion, this golden cross is going to form. It's damn near a certainty at this point. If the past is any indication of what's to come, we should see a massive move thanks to this golden cross that should be here probably this month. Bitcoin is starting to reach overbought on the daily. It can definitely keep going, but just keep an eye out for bearish divergences starting to form. See how we do at this 102,000 level. If we can break this, next stop in my opinion is 106. If we can take that out, our next stop is the all-time high. When that breaks, we should see a massive move. Once Bitcoin broke its all-time high that was established in March of 2024, once this finally broke, we did get a huge reaction. Also, we have something interesting on the weekly to keep an eye on. The 50 MA has held us up this entire cycle. If we break the 50 MA on the weekly, this could be a sign of the beginning of the bear market. We were able to hold it up when we pulled back all the way to the 70s. We did wick under it, but our bodies stayed above. Similar story here. And even earlier in the cycle, we kind of tested it. So keep an eye on the 50 MA on the weekly. As we get deeper and deeper in the cycle, I think the 50 MA will be very important to watch. Keep in mind that we can definitely test these moving averages before we continue higher. We could see a little hiccup, pull back. It's not out of the question for Bitcoin to test $90,000. And we haven't tested our moving averages since we basically broke out of them. Now, as expected, Fed Powell didn't change rates. As said by Powell, we are comfortable with their policy stance. We think right now the appropriate thing to do is wait and see how things evolve. There's so much uncertainty. And while some people think the Fed is overdue to cut rates, the fact is CPI, PPI, PCE is still above the Fed's 2% target. Unemployment in terms of its trend is slowly heading higher, trending higher. I mean, you could see how it's trending up, but from August of 2024, it's been basically sitting at the same level, that 4.2%. If we see this start ticking up, the Fed will likely be inclined to start considering lowering rates again. Looking at PCE, the Fed's preferred inflation gauge, we're still hovering over that 2%. And one thing to consider is when we were starting to get cuts, inflation, at least in terms of PCE, was lower. In September's read, we were close to a 2.1%, October's read 2.3, August 2.2. January of this year, February of this year, 2.5%. February's numbers were actually revised from 2.5. And our March read was a 2.3%, forecasted as a 2.2. If inflation can just ease a little bit, if unemployment rises just a little bit, the Fed is definitely going to be inclined to lower rates. And the market's anticipating this too. While the market isn't expecting a rate cut in the following meeting, we have pretty good odds of a 25 basis point in the following July meeting. By year end, the market is still anticipating some cuts. The market is anticipating that the Fed start lowering soon. Also, I'll leave you guys with this. The Fed has been buying bonds. An analyst, Crypto Rover, sees this as a stealth QE move, increasing liquidity. And I'll leave this down below for you if you want to read up on it. But in our last meeting, the Fed basically decided to slow their rate of QT, reducing their pace of QT from 25 billion monthly to 5 billion monthly. QE is on its way soon. But how are you guys feeling about the Fed meeting? Do you think we were due for some rate cuts? Or is Jerome Powell in the right by saying we should kind of wait and see? And we have our second state now adopting a Bitcoin strategy. Although it wasn't as bullish as their initial bill, it is still a step in a positive direction and may help lay the groundwork for more and more states to actually consider this and not just instantly write it off. Say Bitcoin's too risky, too volatile. With great risk comes great reward. I think Spider-Man said that. I'm kidding, he said something else, but let's just pretend it's that. Anyways, I appreciate you guys as always. Everything I talk about will be linked down below for you. Enjoy the rest of your day, and I'll see you tomorrow.